Okay, so the topic that we will be discussing today is the FTA policy for issuance and clarifications and directives, cases of extension of the deadlines for accepting the submission of tax assessment review request or a request for reconsideration, as well as reverse charge mechanism for precious commodities, especially because they have specific conditions. So we'll be giving a general recap. We'll also be going through the updates that happened in FTA decision number 8 of 2024 with a short recap on voluntary disclosures. And lastly, we'll be going over the selected topics from public clarification VAT PO 40. So these are the topics that we will be discussing today. But the main focus will be the updates regarding them when it comes to procedures, services, and legislation. Starting off by the first topic, which is FTA policy for issuance of clarifications and directives. It is important to note that the competence of the processes that FTA establishes and works on depends on Article 4 of Federal Decree Law number 13 of 2016, which is on the establishment of Federal Tax Authority as amended. So FTA applies processes, and these processes have been updated for the purposes of clarifications and directives. So it was issued to assist taxpayers with understanding the limits of their obligations and rights, and which are related to the federal taxes and relevant penalties, as well as it provided clarifications, more clarification, and not when it comes to providing, giving examples, for example, by assisting taxpayers to interrupt tax laws and regulations regularly and applying these properly and accurately, as well as the mechanism for issuance, as well as giving clarifications and directiveness that are subject to the mechanism decided by the FTA board. So for historical content, since the implementation of the Federal Tax Authority in the UAE, the FTA has regularly been publishing public clarifications, which aims to give general guidance for all taxpayers. So what we do is that we constantly listen to all of our taxpayers by listening to the most repetitive questions that they have and the issues that they'll be facing. And based on that, if we see common mistakes or common repetitive questions, then the FTA issues public clarifications to guide the general public of our taxpayers. So what the public clarification does is it does not change the legislation, but it further explains it. It also gives more examples, real-life examples that have been put in our public clarification to furthermore explain the legislations and make it easier to understand. As well as the Federal Tax Authority issues private clarifications. But the difference between public clarifications and private clarifications is that the private clarification comes case to case. So it's very case specific to the responses, and it's upon request, as well as it has a charging fee. And that's the difference between this, between public clarifications and private clarifications. As well as there was policy updates due to amendments in the tax laws and legislation. The FTA has revised its policy for issuing clarifications and directives, and that's exactly what happened here. Now, moving on to the cases of extension of deadline for accepting the submission of tax assessment review request or request for reconsideration. We'll be going through the updates that happened in this for the extension of the deadlines for accepting the submission of tax assessment review request or request for reconsideration. So first of all, you have to explain what is tax assessment and review request and what is the request for reconsideration. So the tax assessment review process allows individual to request a review of their tax assessment and related to any their administrative penalties by the FTA. And this process is available for individuals that believe that there is technical errors in their applications. And the review process ensures fair and accurate tax assessments and penalties from the FTA side. So as for the request for reconsideration, through this service, the FTA reconsiders a decision issued by the FTA in connection with the applicant. So only decisions that are issued by the Federal Tax Authority to a taxpayer are subjected to reconsideration, and any responses to requests such as inquiries, complaints, or clarifications are not considered as decisions. Hence, reconsideration requests cannot be raised for such responses. So coming to the eligible cases for the deadline extension, you have serious personal circumstances where there is an accident or serious illness of the authorized signatory, or for another case that is considered as a serious and personal circumstance comes death of the authorized signatory, legal representative or immediate family members, first or second degree. You'll have to self-assess your case. And then for business disruptions, the cases that are eligible for deadline extension would be temporary business disruption beyond the taxpayer's control, and then damage to records due to a disaster, such as, for example, the floods that happened last year. And then general malfunction in the authority system would also be a case for a deadline extension. And then sudden discontinuation of the business or business records due to the installation of a new computer system. Another eligible cases for deadline extension would be documentation challenges, which means that the authority requests for additional documents, provided the taxpayer can prove the inability to obtain such documents within the legally prescribed deadlines. So to ensure that in case of the authority request for additional documents and that you stay in the legally prescribed deadlines, kindly make sure that you apply for those documents as early as possible, just so you can make sure that you are legally prescribed to your deadlines. As for the force majeure, the deadline extension case would be the situations that deem as force majeure at the authority's discretion. Moving on to the application of the reverse charge mechanism on precious commodities. So the reason why we picked the reverse mechanism on precious commodities is because due to them having more conditions, and that's exactly why we're going through the updates in regard of them. So the conditions there have to be supplier responsibilities. So when it comes to no VAT collection, you'd need to have not be responsible for accounting for VAT on the supply of goods, and it does not report VAT in their tax return. As for when it comes to the recipient responsibilities, for self-account for VAT, accounts for VAT on the value of goods supplied, and then responsible for all tax obligations resulting from the supply. As for the conditions for applying the reverse charge mechanism, you'd have to have the written declarations required, and they are: the recipient must provide a declaration stating the intentions to resell or use the goods for manufacturing, and a declaration confirming VAT registration within the Federal Tax Authority. So to confirm your VAT registration with the Federal Tax Authority, there is FTA approved method, which is the TRN checker that you could find easily on our Emirate Tax portal. So for the supplier verification, you must receive and retain the recipient declarations, and then verify the recipient VAT registration status using the FTA approved methods that we just mentioned. As for the exemptions, then there is the zero-rated supplies. The reverse charge mechanism does not apply if the supply is subject to zero-rate VAT under Article 45 of Federal Decree Law Number 8 of 2017. And then for non-compliance, if the recipient fails to submit the required declaration, the reverse charge mechanism does not apply. Moving on to mechanism for correction of error or omissions in the VAT return submitted to the FTA. This is based on Federal Tax Authority Decision Number 8 of 2024. So, as per Article 1, error or omission in the VAT return, if a taxpayer discovers an error or omission in a VAT return submitted to the FTA, and there is no difference in the due tax, they must correct the error by submitting a voluntary disclosure. So we'll be having shortly a very general recap of voluntary disclosures, but for now, they must correct the errors by submitting a voluntary disclosure. As for Article 2, the updates say the cases of error or omission without a difference in due tax, and the cases are reporting standard rated taxable supplies in relation to one emirate in the box designated for another emirate. And then the second case would be incorrect reporting of zero-rated taxable supplies, whether by understanding or overstating. And then the third case would be incorrect reporting of exempt supplies, whether by understanding or overstating. Please note that these cases require a voluntary disclosure, even if there is no change in the tax due. And also kindly note that the reference is made to Article 10 of the Tax Procedures Law and Article 10 of the Tax Procedures Executive Regulation for the means of correcting errors in a VAT return or tax assessment issued by the FTA. So now that we have briefly mentioned voluntary disclosures, we'll have a general recap regarding them. So a voluntary disclosure is a form provided by the Federal Tax Authority through which a taxpayer notifies the FTA of an error or omission in a tax return, tax assessment, or a tax refund application. So when should you as a taxpayer submit a voluntary disclosure form to the FTA? In case of mandatory submission, if a tax return submitted to the FTA or tax assessment received from the FTA is incorrect, regulating in a calculation of the payable tax being less than it should have been, and if a tax refund application submitted to the FTA is incorrect, resulting in calculating the refund amount to which you are entitled being more than it should have been. And for the optional submission, if a tax return submitted to the FTA or tax assessment received from the Federal Tax Authority is incorrect, resulting in a calculation of the payable tax being more than it should have been, and if a tax refund application submitted to the Federal Tax Authority is incorrect, resulting in calculating the refund amount to which you are entitled being less than it should have been. That's for the optional submission. As for the time limits for voluntary disclosures, if the error resulted in a calculation of the payable tax being less than required by more than 10,000 dirhams, make a voluntary disclosure to the Federal Tax Authority 20 business days from the date when the taxable person becomes aware of the error. And if the error or errors resulting in a calculation of the payable tax being less than required by 10,000 dirhams or less, please make sure that you correct the error in the return for the tax period in which the error has been discovered, if obligated to submit a tax return for this tax period, or make a voluntary disclosure to the FTA if there is no tax return through which the error can be corrected, also within 20 business days from the date of becoming aware of the error. Now that we've discussed and gave a general brief of voluntary disclosures, we'll be moving to the public clarification, VAT P040, which provides the key amendments to the executive regulation of the VAT decree law. So one of the main keys that were introduced in the public clarification would be the financial services and virtual assets, especially the definition of Islamic financial arrangements. Definitions now include references to the relevant laws for transactions such as Ijra, Murabaha, and Salam, not limited to the tax legislation, of course. And then for introducing new categories, there is Article 42, which expands kindly also note that the VAT exemption treatment is determined in Article 42, as well as introducing investment fund management, which is services by licensed UAE fund managers are exempt from VAT. When it comes to virtual assets, there are three key points, which are transfer and conversion, which is exempt from VAT retroactively from 1st of January 2018. As for keeping and managing, there is taxable if supplied for a fee in the UAE. And then the definition of virtual currencies that exclude digital representations of fiat currencies. Other key points and factors that were mentioned in the public clarifications are the evidences for the zero rating of export of goods. And that would be acceptable evidence such as custom declarations, shipping certificates, clearance certificate from UAE authorities, or certified documents from destination country authorities, and then required to have the prescribed combination and to have all mandatory information on the combination of documents. Lastly would be exports that took place before 15 November of the year 2024 required the previously specified documentary evidence. So if your export took place before 15 November of 2024, then your exit certificate is the only official evidence for anything that has happened before 15 November 2024. When it comes to zero rating export of services and transport, there is export of services, which means that zero rating applies if the non-resident recipient is outside the UAE for more than 30 days in the 12 months preceding the service supply date. As for international transport, then there is domestic transportation of goods that may be zero rated if supplied by the same entity handling the international leg. Then another key point that were mentioned is that was mentioned in the public clarifications is means of transport, which suggests that certain vessels, not primarily for transporting goods or passengers, are not considered qualifying means of transport. One of the most important points that was also noted in the public clarification is non-recoverable input tax, which mentions health insurance. So VAT recovery allowed for premiums paid from 15 November 2024 to 31st of December of the year 2024, provided costs relate to taxable supplies and supporting documents are retained application of a pro rata calculation in case the premium was paid on an annual basis. As for apportionment of input tax, there is the standard method, which continues to apply to government entities and charities with the FTA retaining the right to require a specific apportionment method based on the nature of the taxable person's business and transaction types. And then the use of a specified recovery percentage. And then for tax invoice requirement, there'd be simplified invoices. Simplified invoices should not allowed when the reverse charge mechanism is applied. Kindly also note that the service of administrative exemption that can be granted by the Federal Tax Authority. To issue, I would like to also note that to issue tax invoice to yourself, you can do a simpler invoice in that case, but you should be doing admin exemption instead. I'll be handing the mic back to my colleague that introduced me, Badur. Thank you so much.
Thank you, Ms. Hawra Al-Mazmi, for your insightful and informative presentation. Before moving to Q&A session, we will now display the QR code for the survey on the screen. Your participation is greatly appreciated to learn more about your experience in today's session. And let us know if you would be interested in attending future workshops. Please take a moment to complete our survey and be sure to select tax updates in question number 5. For your convenience, we have provided the survey link in the chat box for easier access.
Kindly note that we'd give everyone 5 minutes just to submit the survey, and after submitting the survey, we'll be starting the Q&A session with our expert. Thank you.
Please note that our focus will be on general questions that are relevant to the wider audience. For individual or case specific inquiries, we kindly encourage you to reach out the Federal Tax Authority through our official service channels. Our team will be happy to assist you future. I'm pleased to welcome our senior tax expert, Mr. Philip Nouri, to start answering the question. Please join me in welcoming him.
Thank you so much. I've been seeing a couple of questions that are indeed really relevant. Please do submit your questions in the Q&A section, not in the chat. But I will make one exception. There was indeed a question in the chat around nursery schools. So I can refer to you indeed that nursery schools, or at least the fees for nursery schools, can be zero rated, subject to meeting the conditions as they are outlined in the legislation. So there are a couple of conditions in that respect, including also having a normal curriculum as it is approved and some other elements. But do note that as a school, you may have quite a few other supplies or transactions. For example, the sale of certain merchandise, uniforms. You might have indeed transport of your pupils, which may have indeed another VAT treatment applicable. If I then move specifically to the Q&A session as they are. So there is a question if there is a deadline for goods to be shipped outside the UAE, I assume to be considered as zero rated. So this question, to make it more general, is around the zero rating for the export of goods. That is your starting point. So you can indeed export goods and subject that transaction to 0% VAT if you meet certain conditions. One of these conditions was mentioned by my colleague Haura, is that you need to have indeed evidence of export. So that evidence of export has been updated through the recent amendments of the VAT executive regulation as from the 15th of November. So there are now certain combination of documents that will constitute sufficient evidence. Before the 15th of November, so before the amendments, as Har has mentioned, you will need to have an official evidence, and the only accepted official evidence before the 15th of November 2024 is the exit certificate. And you need to have commercial evidence next to the official evidence, which then also in a combination of both contains certain data. To come to the deadline of the goods to be shipped out, yes, there is indeed a deadline, which is 90 days from the moment of the transaction happening, or the tax point as it happens for VAT. Do note that in all cases, evidence as well as potentially the time for export in 90 days, you can be asking for an administrative exception if there are certain facts, circumstances, or specific to your case or to your goods that would indeed mandate or would indeed make it useful to have an exception of that one, including the evidence, including the time of 90 days. I think the non-recoverable input tax for health insurance. So yes, again, this is related to an update, an amendment that was made in the VAT executive regulation with effect from the 15th of November. Before that one, VAT that you incurred on health insurance for your employees was overall only recoverable if it was directly for your employee, one, and secondly, if it was indeed obligated or obliged or mandated by the law. That means that in practice, only one or two Emirates was indeed imposing this by law and basically was meeting the requirements for VAT recovery. That has been changed, and basically the recovery or the scope has been extended to more people of the same family. Now, it happens quite a lot that the fee or the price for the health insurance was paid in the beginning of the year for the whole year of 2024. It is important to note that only as from the 15th of November, the new rules, the amendments became into effect. So in other words, if you paid the premium for your health insurance on the 1st of January 2024 for the whole year, then you need to make yourself a calculation. First of all, of course, see if you meet the new amendments and the new requirements. And then if that's the case, you can recover the part of the premium, at least the part of input VAT incurred on the premium, between the period from 15 November to 31st of December. So you need to make specifically a calculation, but you would be allowed indeed to recover, subject to meeting the other requirements, part of that input VAT paid in the beginning of the year. The admin exception for reverse charge, backdated to the year 2018. Yes, you can indeed request an admin exception backdated to be valid from a certain date. And probably what you refer here is an admin exception for the requirement to issue a tax invoice in case of reverse charge. Because if you import concerned services and you make a supply to yourself in that case based on the law, we're not reinventing here the wheel. It was always based on the law, and there has been a clarification. You must indeed issue a tax invoice to yourself, but it is indeed possible to request an administrative exception for that self-tax invoice. And it is possible indeed to backdate it. You will always have to, of course, explain in your application, your request on why it is indeed a burden or why it is administratively quite difficult to issue a tax invoice yourself. So please do refer to the guide and the explanations which give these cases, and there is actually quite a few common errors in there that show you what not to do or how not to submit an incomplete request. I'm looking now at a question around the FTA decision number 8 of 2024 on the voluntary disclosure, where there are cases for the reversal of zero rate supplies reported in the previous VAT return and an input tax claim that needs to be reversed. Now, very importantly to look at, FTA decision number 8 limits its application to 3 specific cases. If you fall in any of these specific cases, the FTA decision mentions that you must submit a voluntary disclosure and you cannot make a correction in a VAT return. So these cases require voluntary disclosure. For any other cases, there are 2 options. Either if the tax due impact is less than 10,000 dirham, you can do it in a VAT return. If the impact on the tax due is 10,000 or more, you must again do a voluntary disclosure. So that's the element to look at. The FTA decision number 8 mandates requires a voluntary disclosure in all cases. In the 3 specific cases, for example, when you have misreported the emirate in your box 1, or when you basically have overreported or underreported your zero-rated supplies, or when you have overreported or underreported your exempt supplies. In all these cases, a VD is now required. For any other cases, please refer indeed to the executive regulation of the tax procedures law to see if you must submit a VD or if you must do that in the tax return. Question again on the evidence for the export sale. This is a more specific question, so I cannot comment on specific cases because, as you will understand, I don't see the facts. I don't have a full overview of the facts. So please, for the evidence, it is very clearly stated in the amended executive regulation what is required. It's always a combination of documents. And the public clarification that was covered by my colleague Haura does give even examples of what would be sufficient. There are questions coming about corporate tax. I think I would be very happy to respond to corporate tax, but we need to limit ourselves here to the VAT. So please keep an eye on new awareness sessions that will be published around corporate tax, because these questions, amongst others around registration and the returns, will be answered in this session. Again, change of entity type, that's a question that goes around outside of the current scope, but it is indeed, I can make it a general comment, that it is indeed your responsibility to make sure that your registration data, whether they are for VAT or for any other tax type, are always kept up to date. There is a request on where to submit the written declaration to apply the reverse charge mechanism. Again, I see where the question is coming from. So my colleague Haura mentioned that specifically in the case of precious commodities, gold, diamonds, and other precious metals and other ones, there has been a new FTA decision issued where you must apply in certain cases a reverse charge. That basically means that as a supplier you do not charge VAT, but it will be a responsibility of your customer to account for that VAT and to apply that one to be able as a supplier not to charge VAT. It is important that you receive a written declaration from your customer. There is nothing to be submitted to the FTA, if that's a question, but you must obtain as a supplier such a written declaration. You must submit to your supplier as a customer such declaration to be able indeed for your supplier not to charge you with VAT. Is VD required for errors above 10,000 dirham only? I believe I responded to that question. So please go and have a review of Article 10 specifically of the Tax Procedures Executive Regulation. That's Cabinet Decision number 74 of 2023. You will be finding indeed quite clearly explained already in the legislation the different cases. Apologies, Miss Mary, but you're asking a very specific question and the FTA has no mandate to give you tax advice. So if there is anything unclear about your logistic and administrative support to clients outside the UAE, I can refer you to the private clarification request, but I would be exceeding my mandate by answering this question. I do believe, though, that if you make a review of Article 31 of the VAT Executive Regulation, you will see the requirements and the conditions for zero rating for export of services. VAT applicability for fund managers, advisors and distributors. Please have a look indeed at article on top of my head 45 of the VAT executive regulation, and you will see that for a fund manager to potentially be exempt from VAT or otherwise, there are a few conditions, and you need to be licensed by a regulator here in the UAE. So if you are a fund manager licensed outside of the UAE, you may not be meeting the requirements. Do we need to file a voluntary disclosure if you have missed out on reverse charge invoices, mechanism invoice in 2024? Again, please do refer to it, and you may indeed see that there is a rule in place that if the tax due impact is less than 10,000, that you may have indeed the option to correct your error via a VAT return, not necessarily through a voluntary disclosure. I think Mr. Mohammed Abu Bakr, you asked us to advise you. Unfortunately, FTA cannot act as a tax advisor. So, and anyway, the question if supplies to all GCC countries will be treated as zero rate or exempt supplies, that's a very general question, and you would need indeed to review exactly what you do. What are your supplies? Are they supplies of goods or supplies of services? And then refer indeed to guides and legislation for the applicable VAT treatment. For the process of seeking a clarification, and I do assume a private clarification, please refer to our website. You will find indeed both technical guides. Technical guide, that means explaining what is a private clarification and when can you ask for it and how should you ask for it, as well as user guides on private clarifications, which explain you on how to navigate Imara Tax, which is a portal to use the service. Can you specify if water transport and freight is zero rated? And if so, should I register for VAT even if it is zero rated? I'll take the second part of the question. If you indeed are meeting the mandatory VAT registration threshold of 375,000 dirham per year, you must register for VAT, or if you would exceed that threshold in the next 12 months, irrespective if your supplies would only be zero rated. But if that's the case, if you only have zero rated supplies, after you registered, you can indeed refer to the FTA and ask for an exception from registration. But the steps to follow is first of all to register and then to ask for the exception. If water transport and freight is zero rated, that's a twofold question, and we would need indeed specific facts. And if we would have specific facts, we would not be able to answer it because it is a matter that concerns yourself. Will there be penalties for resubmitting a voluntary disclosure due to errors? I can refer indeed to Cabinet Decision number 49, where the administrative penalties for the submission of a voluntary disclosure, in other words, for making an error in the tax return, are specified. So there is not necessarily a penalty specifically for submitting voluntary disclosure, but there is a fixed penalty for having made in the past an error in your VAT return. And I believe what I just mentioned, Ms. Christine, is also asking your question on the penalties for VDs. Ms. Dolly, you're asking if one of your entities in a tax group which has only taxable expenses and no taxable supplies and out of scope supplies, meaning the recharge order entities in the tax group, does this entity require to be removed from the tax group? You will find indeed in the legislation very specifically what are the cases for removal from a tax group. If the entity is not meeting the requirements anymore to be normally registered, for example, and there could be a registration based on taxable expenses, You may indeed keep that entity, but please look at the specific facts and the requirements to see if an entity can remain in it. It is indeed your responsibility to inform the FTA and to basically submit an application for removal if the conditions are not being met anymore. On the submission of corporate tax returns, please do refer indeed to the awareness sessions on corporate tax return. There's quite a few of them. If you have failed to submit your corporate tax return, please do so, and because the deadline already passed, please do so as soon as you can. But be aware indeed that this may incur some penalties for late submission. I see questions about Saudi's Zakat tax. I believe this is not part of the mandate of the FTA. We're looking after UAE federal taxes, and you need to refer to the Saudi tax authorities for any questions on their taxes. Somebody wants proof if you are indeed, that's Ms. Raluca, if you are a taxpayer into the UAE and you want proof that you are and that you're a resident. I believe you need to submit, looking at your name, to Romania. Again, this is about a tax residence certificate. There is no such requirement tax residence certificate for VAT, so you need indeed to review the details on UAE tax residency, and on our website you find a tax residency guide to understand if yes or no you are a resident taxpayer, not a resident taxpayer, tax resident in the UAE. So I'm answering this question because it's a service that the FTA is giving and I understand the importance. So please, in first instance, refer to the guide on tax residency on our website, and you can make an application through Tax to request for a tax residency certificate. If you have missed inserting reverse charge invoices in your VAT return, this is considered an error in the VAT return, and you must indeed correct that error through the required means. That can be through the next VAT return or voluntary disclosure. Sample format for a self-invoice of reverse charge. There is no official sample. You can use your own format. I'm simplifying my answer. Just make sure indeed that you mention on that self-tax invoice all the requirements, all the mentions as they are outlined in Article 59 of the VAT Executive Regulation. But how you construct it, how you format it, that is up to you. I know there is a couple of other questions here, and thanks a lot for submitting these, but we are running out of time, so don't worry. I'll be picking up these questions, and if relevant, we'll be getting back to you on a separate folder onto that one. Ms. Bedour?
Thank you, Mr. Nouri, for addressing the questions and providing your expertise. And now we are reaching the end of today's workshop. We encourage all of you to follow us on our social media platforms and visit our official website for get updates on our upcoming events and activities. Thank you, everyone, and have a very lovely day.